know I got problems, and I don't know where to go.
When you hear the term indicator, it is simply just a pattern that gives you a signal as to when you should enter a trade. Now, you don't want to rely solely on the indicator to help you get into the market. You want to use it as confluence. And when I say confluence, we're simply referring to extra confirmation. So let me show you exactly how I would apply an indicator. And I'm going to discuss some of the most common indicators that a trader would use. Now, there's all types. There are momentum indicators, there are trend indicators, there are volatility indicators, but I'm only going to go through a few just to give you an idea of how you would apply a technical indicator. I am on the daily chart of Euro AUD, and let me show you how I would approach the market based on where the price is right now. So we're going to go ahead and we're going to identify the trend. So as you can see, the price has been moving upward in the past. It has given us a pullback on this daily chart. So here was our flag. Okay, so this would be a flag. So we had an impulse to the upside, impulse, correction, continuation. So we had an impulse, a correction, and now you can see we had a continuation. And now the price is dropping again. So would you say that we are in an uptrend, or would you say that we're in a downtrend? Well, it really just depends on how you're following the structure of the market. So this is going to be a bit subjective to some people. I like to use a 50-period moving average, for example. This would be an example of an indicator. So I like to use the 50-period moving average, which these are just called moving averages. And there's different periods that you can use on a moving average. When I say period, if I click on the settings of this tool in TradingView, you will notice that I'm using a 50 and close moving average. Now there's moving averages that go by the 100 length or the 200 length, and simply what this number does is it measures the last 50 candles. For example, if I was using 100 MA, it would measure the last 100 candles, and it pretty much smooths out the price. So over the last 50 candles, it pretty much tells me what the market has been doing. Okay, so people will use this for entries, they'll use it for exits, they'll use it for trend trading. In this case, I like to use it for confluence of the trend that I'm trading on a particular time frame, such as if I'm trading the daily. Then if I am assuming that this is in a downtrend and I want to look for an opportunity to sell, then as long as price remains under the 50-period moving average, I'm going to look for the opportunity to sell. If price is above the 50-period moving average, for example, then I will look for the opportunity to buy. For example, here is an area of resistance that became future support. And notice that once the market was resistance here, it rejected to the downside. It was resistance here, it rejected to the downside. And in the future, this resistance area also became support. And this became a buying signal for us to buy in that trend, now transitioning into an uptrend. So we went from a downtrend into an uptrend. And as long as price stayed above my 50-period moving average, then that was a signal that I would keep buying the market. So that is one indicator, for example, that you can use. And again, the type of indicator that you use in terms when it comes to a moving average is going to depend on your style of trading. So the reason why I like the 50-period moving average is that I like to scalp an intraday trade, and I'm a very short-term swing trader. I don't like holding trades for a very long time unless I'm trading significant price levels where the price is at a major discount. You'll learn that stuff over time if you haven't already. But this is just an example of one indicator. Let me show you another popular indicator, and that would be Bollinger Bands. I really like Bollinger Bands, and I'm going to show you this is how it looks. And what a Bollinger Band is simply an indicator that has a moving average in the middle. So you'll see that white line in the middle, okay? I just went over moving averages and told you exactly what they do. So the Bollinger Band has a moving average in the middle. It also has a upper band. This upper band is the red band, and this is a signal to us when the price is deeply overbought. So what I mean by overbought is notice how this price was moving upward, okay? And eventually it came to an area where buyers struggled to keep pushing that price higher. So this signal to us that once the price moves outside of the Bollinger Band, the price is overbought. And it's a signal that, you know what, the price just might start to turn around at some point, which it did here. So anytime you see wicks, for example, outside of the Bollinger Band, notice how the price rejected and it declined to the downside. It rejected and declined to the downside. So I like Bollinger Bands. They're very reliable and consistent. They're not 100% and no indicator is, but they are a really good confirmation that you can use along with price action to help you get into a trade. Let me show you another way of how I would have used the Bollinger Band in this particular setup right now. I'm going to show you an example of drawing support and resistance on Euro AUD. So notice that this is where the price is right now, where my crosshair is, and below price, I'm just going to mark a level of support. So this would be my level of support. This is our floor, okay? This is where the price is holding up. So notice that the price is bouncing off of this area, and this is what we would call our support. So I'm simply going to mark that as my support. And now I'm going to clone this zone, and I'm going to find an area of resistance where I could simply find an opportunity to possibly sell in the market, okay? So let's go ahead and clone this. And then we are going to find our area of resistance. Now, why am I highlighting this area? So remember, when you're looking for support and resistance, you want to find areas where it was a cluster of support and also resistance, because those are the areas where the market is most likely to reverse and turn around. So notice here, it was support, it was support, it was support a number of times, it was support, it was support, it was resistance, and now it is rejecting off of this area as resistance. Now, because price is making lower lows and lower highs, for example, I'm going to be looking for the opportunity to sell. Now, we did go above that area right there. So price broke above our high right here. And this could have been a signal that, you know what, the price might push the opposite direction, but it did come back down again. So I will say that we're still in a downtrend. Now, if I apply, for example, my Bollinger Band, when the price is at the bottom of the band, you're going to look to buy, okay? So notice here, this is support. Notice how the price fell and retested support. Notice how price is sticking outside of the Bollinger Band and the price moved upward. Where did it stop? It stopped at our resistance. And let's just measure how many pips this is. So from this support to this resistance, that is about 160 pips. So if you were trading $1 a pip, then 160 pips would be $160 if you were trading $1 a pip. So that is just another example of how you can use an indicator like Bollinger Bands to get into a trade. So notice that when I got into this trade and I started with a naked chart, no indicators at all, nothing, just price, just the candles, right? First thing I did was I identified my trend. So I identified my trend and I pretty much have a downtrend, okay? After I said that, I then said, where are my high probability areas where I can buy and sell, where the market is likely to go in reverse? Well, this is an area right here. This is support. And we already identified that right above it is also an area that we could use to sell, okay? So we are going to find an area on our chart, for example, that serves as both support and resistance, all right? And that's our resistance right there. And we already went over why we would focus on this area as a good place to possibly sell. We could have bought from the bottom of the Bollinger Band, and this is a very strong level where the price is most likely to reverse. The only thing is that on this daily time frame, we would have been trading against the trend. So we would have been trading against this downtrend, and we would have been going against the trend. So it is a good opportunity in my opinion though, because notice there is no price action down here below the level, and it's more than likely that buying pressure would come in after sellers have had charge for some time. So that is one way that you can use indicators. I hope that that gives you an understanding of just how to apply technical analysis using indicators to your chart, and I'm sure that you will figure out which indicator is best for you over time.